Okay. Let me share my screen. Hope everyone is seeing my screen.
Yes, you live and clear, coach.
Carry Sebo. I'm looking for RSI. Stochastic. Okay, so we are going to combine the two indicators whereby we have the smart money concept, and again we have the stochastic RSI. So let us first look at the settings of stochastic RSI. Okay, these are the settings. We have K, whereby K is 4. We have D, which is 2. We have RSI length, which is 6. We have stochastic length, which is 6. And we have RSI source, which is 3. Yes, we choose 3. Here we are done. Okay, there we are done here. Then we go to, it is called stylo. Yes, you go to stylo. You just give the stylo. The stylo, it means to design, like you are designing your lines. So K is a line, is a moving line. So you can look at the chart now. This is the K. You can see it is in blue. It is in blue color. So that is K. And we have the D. We have the D, which is the signal, the signal line, the signal moving average. This is the D, and it is in orange color. You can see it. It is in orange. This is it. It is moving with the blue one. So these are the moving averages that you are seeing. So it is K and D. So when we go here on upper band, it is this one, which is at the top. The line, the straight line, which is at the top, and we have to make it 90. We have to make it 90. This upper band, it is 90. You put 90, okay? So therefore, and remember, this red one is where we call the overbought region. It is overbought region, where there is the red line at the top. It is called overbought region. So we have middle band, whereby the middle band is the dotted line you are seeing in between the two lines. That is it. It is called the middle band, and its line, it is at the 50 line. It is at 50 line. And we have the lower band. Yes, we have the lower band. Lower band is 10. Yes, it is 10, and it is the green one, and you can see it. It is at the bottom. Now this line, which is at the bottom, it is called the oversold region. It is called lower band. So it's a matter of designing them. You put your favorite color, but by putting the favorite color, of course, you should be understanding what is this color representing. Is it representing oversold or overbought? You get the point? That is it. So let us mind about this. Make sure the lower band, it is line. Then the middle band, we can make it line or dotted one. Then the upper band, you can make it line or you can make it the dotted one. So where you are seeing here, this the second box, we have this, the boxes for colors. Then we have the second box. The second boxes, it's where you decide whether to make it dotted line, whether to make it line. You get the point? Then finally the third box, it is showing the values of the line. Now we have said the upper band we make it 90, the middle band we make it 50, then the lower band we make it 10. So from there, I think from there what we do, we click on the other 3 dots which will be at the bottom of your phone. You click those dots and you save as default, then you click OK. There you are done. There you are done, and your chart will be looking like this. I think the rest you have been attending classes, and I believe you have the settings for smart money concept. So the smart money concept is already here. It is already on chart, and we have the RSI on chart as well. The RSI will be at the bottom of your chart, then the smart money will be within the chart. Okay, so what we need to understand from here, mostly we are going to talk about this one, the RSI. We are going to talk about it. Let me first increase. Okay, like that. So that is enough. Okay, so like I told you, when we are using this RSI, we need focus in 2 areas. When the market is at the top here, in this red line, at this red line which is at the top, I told you this line is 90 line. When you see these moving averages, these lines that are moving within are at the top here, it means the market is in overbought. It is in overbought, and we don't need to trade when the lines are here. There is no need to trade when the lines are here. Again, there is no need to trade when the lines are here. We only trade when the lines are down here at 10 line, the green one. That's when we trade. We trade when lines are below the dotted line. And when you get them, when they are below the green line, which is the oversold region, then for that, you are good to go. So let me put the line. We can use the vertical line to identify. Here we could put line. Here we could put line like that. So, and we follow. So I'm putting this line because of this bend here at that bottom here. The lines were moving from this side of oversold, then moving towards the overbought region. Overbought. They were moving from the overbought here on the red line, moving towards the oversold. You get the point? So at this point, the coin was down when it was at this line, the green line, where I have said that it is the what? The 10. This line represents 10, whereby, and these lines were coming from below and now moving towards the overbought region. Therefore, we could enter here before this line is making a sharp corner. So when we check on the chart, now this is the chart. Are we together? This is the chart. This is the chart. You get the point. Therefore, so if you check here on chart, you first, let us first reduce the 2 indicators. By considering the 2 indicators, we can look at this point. This was the block. Remember, I told you we are going to compare the 2 indicators, whether they are talking the same language. We had a block here, which is the green one. Okay, we had the green one. Therefore, this coin was coming here to test the block. It was coming here to test the block. So you can look at this block. It was formed at this point. Now we could see the market moving up to this point, and we can see the market at the same time coming back. It was coming back to test the block here for the first time. It was coming back to test the block here, and therefore you can see that I even shared this coin with you to take 30%, and it was successful. You can see I shared with you take 30%, 3%, and 20%, and 10%. At the end of the day, we collected over 70% from this coin. As you can see that it was down to test the block. Then finally, after testing the block, you can see how the market reacted, pushing up to break the previous high. When we talk the previous high, we are talking about this. We are talking about this here. Let me first remove this. First get off. Now, this is the previous high. Previous high, it is here. Now this is it. This was the high. This was the high. So you draw line like this. Draw line. Just connecting the highs. So we could see that this market at this point, market was coming from this end. After forming this high, then it went all the way from here up to this point where we are meeting the block. So after hitting the block, we can see the market reacting towards the uptrend. We can see how market reacted up to the what? Up to the same level. This level, we can call it supply level. We can call it resistance level. You get the point? It is supply level, it is resistance level. You can call it anything you want. And this one down here, you can call it the discount level, you can call it the demand level, you can call it the support. Are we getting the point? Now, this is the support. This is the support. So, for you who are new, maybe you don't understand support. If we talk about support, now this is it. These are my boxes here. And this is another one. The upper one is resistance. The down one is support. Okay, so let me show you. Market will be moving within the area. Within the area, we can come and touch this resistance. If we fail to break, we are likely to come back to the support. Are we getting the point? Meaning here, we expect market to push back because it is where the support is. Because from here, people pushed the price from here up to here. So we expect the people to do the same. When we come back for the second time, we expect people to do the same. Therefore, after hitting this level, we could expect the market to reverse. So that's why we call it the demand here, we call it discount, we call it support. You get the point? So when we hit here, we are testing this level for the second time, whereby you can call it the double bottom. We are hitting it for the second time. Therefore, the market is likely to push up. So when we come back, we are weakening this now. When we come back, we are weakening this resistance. So when we break the resistance, we are continuing upwards. So when we fail to break, again we are coming back at the resistance level. Let me hope you are getting it. So when we break it like this, we are going to come back and test and push up. So by pushing up, we have to look at the next resistance. Which resistance do we have there? You get the point? So we consider that and we decide to enter the market. So therefore, at this point, that please, microphone off. So we can look at this point where we entered from last time. So I was showing you that this arrow here, the market was down according to the RSI. According to RSI, the market was down, completely down. That's why we can see that the moving averages were coming from oversold region. They were coming from oversold region, and when we compare from the chart, the candles are also at the discount level or at the support level. So that's why you could consider that and enter the trade and you enjoy. So we can also look at this as well. Let us look at this as well. So here you could even enter for the second time. At this point, You could even enter for the third time at this point. I don't know whether you're following. You could enter the fourth time at this point. You get the point? By following the market structure here, you could enter 4 times. You get the point? Then from here, you could enter here, targeting the previous high. That was 4%. You could enter here, targeting the previous high. That was 8%. You could enter here, targeting the previous high, which was around 9%. Yes, which was around 9%. Can you see? When you are following this, as long as we are coming from oversold, and you can see that we are coming from the change of character here, because this was the downtrend. This was the downtrend from here up to here. Then this was the new journey for the uptrend. Therefore, in the uptrend, we expect the market to keep moving up, down, up, down, up, down. As it is moving up, it is forming what we call the higher highs. As it is moving down, it is forming what we call the lower, the higher lows. Are we getting it? So after forming one high, it will come down, like as I'm going to show you down here. It will be moving in this manner, like this. It will come down here. Then when it is coming back, it will be targeting this high. So we have to break it. You get the point? We have to break it. By breaking it, we have to come back and test the same area. So that's why we need to draw line from the previous high. So you construct line like this, the straight one. Construct the line which is straight one like this. Now, when the market is coming back, it will respect that line. That's why we call it support. So by going back at the top, we are breaking the previous resistance. So we are likely to break this line. Therefore, your take profit should always be this top, at this top. That is your take profit where it should be. So we are going to break it and we come back. Are we getting it? We come back on the same area, then we break the previous one like that. So you have to draw lines always like this. Construct a straight line like this. Construct another straight line like this. Construct another straight line like this. You get the point? Therefore, these lines that are here, they are working as resistance at the same time as support, because it will be according where the market is. It will be according where the market is. Therefore, from here, it was resistance. But after breaking it to hit this level, by coming back, it was working as support. So the same line can work as resistance. The same line can work as support. It's a matter of understanding it and how to use it. You get the point? So we could enter at this point if it is uptrend. Then again, we could enter at this point when the market is testing the support line, but we are targeting the resistance level. So that's how we have to keep trading the uptrend movement. So again, you enter here, you are targeting the previous high where the market was coming from. So this is what we call the uptrend direction or movement. So when the market is moving in uptrend way, that's how it moves. So what you need to do to understand is this. This is the lowest point. At this point, after forming the lowest point, we are coming back here to form the first high. So by forming the first high, after forming the first high, the market will come back to form what we call the higher low. As long as we are in uptrend, we expect to see these three: lower low, higher high, then higher low. So meaning this is the second higher high at this top. Yes, it is the second higher high at this top here. Now that means here we have higher low, here we have higher high, here we have a higher low, then finally here it is a higher high. So meaning by dropping to test this line, the market is forming what we call the higher low at this point. So that's how the uptrend should be looking like. And when you compare this chart, and you put it on this candles, you can see automatically that was the movement that we can see at this chart. You get a point? From here, 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 then here, then here, then here, then again here, then again here, then again here, then again up, up, up. You get the point? So that's how it was. That's how it was. Only that at times we may not be understanding it, but that's how it was. You can see my line. We have high, we have low, higher low. We have high, we have another higher low. We have another new higher high. We have another higher low. You get the point? So that's how you follow the uptrend. That's how you follow the market, and you keep trading and you keep enjoying. Ladies and gentlemen, before you enter the trade, for example here, before you enter the trade, even though these moving averages are down here, you have also to look at the chart. Where is the market coming from? At times, you may find that there is a mistake. So you have to first understand before you decide to enter the market. You can find the moving averages are coming from here, but when you look at the chart is at the peak. So there you don't need to trade. Are we getting the point? There we don't need to trade. So you can see we traded here, we are right. Here we traded, we could trade here. Let me see. We could trade at this point. We could trade at this point, here, because the market was forming the new lower low. Therefore, after forming the lower low here, this was the lower low. This was the lower low here. So we could trade at that point. We could trade at that point. And again, we could trade on this point. Okay? On this point. Because, yes, this was, according to the last high, it was 6%. Here, we could trade up to 6% as well. So, by considering here, the market was coming here to form what we call the higher low. Yes, the higher low at this point here. Now, therefore, after forming higher low, as long as you see the word change of character, you get the point. So, when you see change of character, automatically know that market is coming back to form the higher low. Market is coming back to form the higher low. So, after knowing that, you could check here, down here. You could check down here, where are the lines coming from? I told you, as long as we are below the moving, this line of 50, the dotted one, as long as we are below it, and you see these lines bending, pointing up, automatically know that the market can change. So therefore, you can enter the trade with enough margin calls. There, you can win the market. So now, from here, let us check here. Let us all focus here. Now, when you look at this point, let us draw line even. When you look at that point, even though the lines were coming from down, but when you look at the chart was also coming down. The chart was coming down. So, to me, I couldn't trade. I could not trade at this point. To me, it was not the right point to trade. Though the moving averages were pointing up and they were coming from the oversold region. But looking at chart, remember this was the previous high, and the candle had just started to drop down, and lines here are pointing up. How comes? Hey, how is it possible? It is the matter of risking here. You could risk here, but to me, no, I couldn't risk. I can't risk at this point. Therefore, at least here, you can see here it is very nice. We can look at that beautiful pin bar. Here the market was so nice because it was at the discount level. When you consider this high, this lower low, and we draw line, the market was at the same line. You get the point? And at the same time, it was showing you here, it was coming back to test these two blocks. Actually, there are three blocks. We have the light blue, we have the order block for the discount level. Again, we have another block which is green. So market was coming back all the way from here to test these three blocks. So here it was the right time to enter the trade. Okay, it was the right time to enter trade. So now, by targeting the previous high, and it was around 30%, and this market is going there, is going to test this block, the orange block you are seeing at the top here. That's where the market is going. I told you it is always going back there to break the previous high. You get the point? So let us have more example, and we call it a day, guys. I'm switching off to another coin, and we'll look at the movements here. Okay, so now when you look at this point here, it is the same point. It is the same case. Here, lines are coming from down. But when you look at the chart, the market has already formed the highest point. So it is coming back. So here you were not supposed to trade. Here you couldn't trade because market was just coming from the highest point. It was starting a new journey of downtrend. So even though the lines were pointing up, but we couldn't trade, ladies and gentlemen. We have to apply what we call common sense. Apply common sense alongside trading. There, you're good to go. Are we together? Yes, we have to apply the common sense as well. So just watch and enjoy. So when we look at this point here, even though the market, yes, here market was down, and we can see the discount level at this point. We can see the discount level. That means market was coming back to test this discount level. Therefore, when we draw line, when we draw line, let us draw line. When we draw line from here, we can see that the market was coming from oversold region. Here, market was coming from oversold region. Therefore, here you, of course, you had to enter the market. At this point, you had to enter the market, and you can see I shared with you this coin to take 4%. So even though I never had the RSI on my chart, but at least I considered what you call the smart money concept and Fibonacci. So I ended up getting this 4%. You get the point? So we could even push it up to this level because market was supposed to hit this level where you are seeing this color, this one here. It means it is the resistance level. Are we getting it? It is what? The resistance level here. This line here. It is the resistance level. Therefore, that's why the market pushed from here up to here. And we had entered here, it was out 3%. We had entered here, it was out 3%. And again, we had entered at this top here, at the bottom here, whereby I shared to take 4% and it was successfully sold. You get the point? So, therefore, at this point, when the market is at this point here, at this peak here, let me see, here, that is the resistance level. It is the resistance level, or we can call it the overbought region. So we can't buy at overbought region, we just wait in oversold region and we enjoy the market. Otherwise, that is it, ladies and gentlemen. I don't know whether you have questions over there, then we call it a day, guys. Anyone with question? Are you very okay? We close from here. As if I'm here alone. You mean you are not there? You are there,
Yeah,
but
they are
very
good.
quiet. Can you imagine? As if I'm here alone. People don't want market analysis. I know. You like breastfeeding. That's what you like. I know Mary is losty, Mariam is losty. But no problem. With time, you will understand it. With time, it's the way we started as well. We started like that, ladies and gentlemen. Trust me, we started like that. But finally, we ended up getting it. So trust me, you will also get it. It's always matter of time. It is always matter of time. So when you look at this point now here, here you can see these lines are bending. They are bending here. So by bending, it means the target is where? It is at the resistance level. Target is here. The market is coming here at this level. You get the point? As long as you see those lines bending, automatically know that they are pushing up to hit the resistance level. The market always moves with with what? It always moves with the aim to break something. It can drop to break the support. It can raise to break the resistance. Hope you are getting my point. So whenever you see the market moving, know that it is having target. Look at this. I had shared this coin sometimes back. It couldn't sold. Let me see. I had shared it at this point. But you see these lines were at the resistance, and at the same time it was at overbought region. Here the RSI was at overbought region. I shared this coin here because I had measured here the resistance, but surprisingly we passed through the resistance and finally we hit this level of discount level. But now we have been buying margin calls, selling, but now finally we are do what? We are out. Finally we are out. So the one who entered at this point when these lines were bending here, you could target what? This line. So that's where the market is coming. Market is coming there, here. So you could enjoy your 12% there.
Excuse me, coach.
Yes, please.
Which lines are you talking of?
The lines, I'm talking this on at this one. Let me show you. Just a minute. Let me get my. I'm talking about these lines. The moving averages. These ones. Are you seeing them? Are you
Yes.
seeing them? These the lines I'm talking about. When they are bending, like here, like here, like here. Are you getting it?
Yes.
But at least we should be below the dotted line. Don't find them bending here when they are at the top of dotted line and you enter. No, enter when they are below the dotted line, and when you find them below the green line, there you are good to go. As long as you compare what is happening here, is it what the same what is happening on the chart? Don't trade when the market is at the peak here and lines are bending. No way. We trade when the market is down and lines are bending, like here now. Here currently where we are here. We are right to enter the trade because market was at discount level. Can you see this discount level word? It is here. Market was at discount level, and at the same time it was testing the discount level, so we could enter at this point immediately. Hope you get it. Are we together?
Yes, coach.
Okay, thank you. Any question before I close? No question? No question. This coin, it is still giving out money. Oh, Can you see? It is down. So when we compare, this is the highest level, and like I had told you last time that it is going to break that line. So it was just coming to this level, and now it is still above it. Therefore, we are likely to form a new high. We are likely to form a new high. So that is it. Any other question? Any other question? If there is no question, allow me to call it a day. Allow me to call it a day, ladies and gentlemen. I told you Rudo will kill us with money. Look at it. Our 20% is done. I shared this coin yesterday to take 20%, and it is finally done. But you never entered it. That is the problem with you. You don't want the 20%. You want 3% and 2%. It is okay. It is okay. Me, I entered it, and I'm done with it. For you, if you are still waiting, it's up to you. It's up to you, guys. So, guys, ladies and gentlemen, allow me to call it a day, and we meet tomorrow. Have a blessed day.